All right. So today we have Hassan from Arca. Do you want to quickly introduce yourself and Arca, maybe?
Sure. My name is Hassan Bassiri. I'm a portfolio manager here at Arca. Arca is a digital asset hedge fund. We trade everything under the sun, pretty much. We do, the top 200. We trade derivatives. We have a few strategies. Our first strategy is just, market beta, things like large cap names, Bitcoin, ETH. Then we have idiosyncratic risk, small flyer, like micro caps, small caps that we are willing to put 50 bips in and hope it gets us 3 or 4% back. And then we have, we play catalysts, like events, whether that's mainnets or upgrades and things of that nature. And then we also do some, in addition to the derivative trading, we do a little bit of ARB and things like, long ETHE, short ETH, things like that. And we have like a team of 5 or 6 people, and the CIO had a pretty long history on Wall Street. So, I mean, he just brings a lot of the experience to the team, and we help put those ideas into action.
What about yourself?
Yeah, so for me, I have a weird kind of story. So I was actually a lawyer doing like cross-border M&A at KPMG, and I really hated my life. And I became a CFA. Yeah, no, I hated my life. And I became a CFA, and then the second I paid off my debt, I started looking for a new job. And the funny thing is, like, one of the founders of Arca, who's actually no longer with the company, he interviewed me at Guggenheim a few years before Arca started, and he was like, "Pitch me an idea." And this is like 2015-ish. He was like, "Pitch me an idea," and I was like, "Bitcoin." Off the run name is Bitcoin. And so he's like, "I can't give you this job, but I'm going to keep you in mind." And so when he came over to Arca, he was like, "If you're still into crypto, we're starting this hedge fund, and I'd love for you to come by." So that's how I got started. I came by and haven't looked back since. But unfortunately, he left the fund early, and we've actually been doing pretty good with it. So we're pretty good with Adam, but we wish him nothing but the best.
Wait, so was he a Bitcoin believer back then when you pitched him?
No, honestly, the first thing he said to me was, he was like, I'd get fired for ever pitching this immediately. Like, this is major. That's the first thing he said. Like, I can't. He's like, "I like the idea. It makes a lot of sense. Macro, political hedge, political uncertainty and things like that." And he's like, "But I can never, ever, ever bring this, because if I ever brought this, not only would I get fired, our clients would leave Guggenheim for even suggesting things like this." Besides, he was suggesting things like this. Yeah. Besides, he was.
No, keep going. Everybody, please mute yourself. Everybody else, please mute yourself. But Hassan, keep going.
Yeah, no, he was a credit guy. You know what I mean? So he's looking at like if he makes like 2 points a year on investment grade debt, he's done very well. He's beat his benchmark. So Bitcoin was a little bit too advanced for him at the time, but he liked it. I mean, everyone's, like, everyone kind of has the same experience. Everyone's like curious about it, and there's a lot of reasons it makes sense within the context of a portfolio. I just think that when you get to these institutions, these like white shoe institutions, and it's no different when I was at KPMG, there is a lot of career risk. Like, KPMG didn't even start giving consulting services to any digital asset companies until like 7-8 months ago. Until then, they were taking a step back, and they still don't audit them, by the way. KPMG Cayman Islands just started auditing crypto funds, but like KPMG US still does not provide any audit services to crypto funds. And it has to do with the same thing. It's like career risk, regulatory risk. KPMG is a very conservative firm. They don't want to be seen as like advising or consulting for potentially Bitcoin, which still has a view of being used as like a tool for drug dealers and things like that. That's not correct, but that's still the stigma amongst like some of these bigger institutions. But you're starting to see a shift. Like I said, like some of the non-US KPMGs are starting to provide audit services, and they're doing really well. and this also applies to, what like Guggenheim, if you said, hey guys, you want to buy some Bitcoin, they'd say absolutely not. But we have to change the narrative, and that's what we're trying to do here at Arca.
Yeah, for sure. All right, let's talk about the market.
Yeah.
How do you want to do this? Top down or bottom up?
Let's go.
Macro, starting with macro.
Yeah, let's do some macro. Let's do some macro.
Okay.
Yeah, so I mean, I think so. Like, let's just start. DXY is, what is it, 94. It's kind of like stabilized after running, and I think I wish I could show you this chart, but basically pretty inversely correlated to the price of Bitcoin on a day-to-day basis. Like a lot of people say, Bitcoin is not digital gold, but like the digital S&P. So, on a short-term basis, we think it's, obviously the charts don't lie. On a short-term basis, it's super correlated. At Arca, we don't think we have an edge trading Bitcoin based on short-term correlations, just because there's tons of macro funds that have tons of experience, and we don't have an edge there. So we try to position the portfolio a little differently based on what we think is going to happen in the near, medium, and long term. And right now, we just think that, like, taking a step back, looking at everything that's happened in the past week. Trump gets COVID, BitMEX falls under CFTC and AML, anti-money laundering regulation, and one of the founders is arrested, and Bitcoin didn't really budge. Like, we feel like if you told me that all these things were going to happen in a week, I probably wouldn't have made any more money than we're making today, because I wouldn't have known. I feel like the market's matured, which is why we haven't really dropped. But at the same time, it shows an insatiable demand for Bitcoin. It shows that BitMEX isn't the most important venue as it was in terms of OI and volume and traders. Most traders there are short anyway. And it just shows an incredible maturation in the market, like low leverage, no major moves one way or another. So, I mean, we're really happy with it.
But these events are independent of macro, right? Like, these are the fact that Bitcoin didn't react to these events doesn't mean that they're not going to react to macro. Like, these are separate factors, right?
Yeah.
So you are saying you don't really have an edge in either macro nor these, like, I guess, short-term event catalysts. Yeah,
I mean, here's our thoughts right now. Is like, if you look at, anecdotally, we've been talking a lot of actual hedge funds in the traditional financial space, and what they've been telling us is their strategy is they have a lot of cash on the sidelines, and there's two reasons for this. The first is a lot of hedge funds have had, like Delta Long, that hedge funds have had very good years, and they want to preserve the carry, and they don't want to make any mistakes going into the end of the year because they want to get their bonus. And when you're up as much as the S&P's up after recovering from the lows in March, it makes sense to kind of take some chips off the table and let it play out. It's sitting here at like 350, 345, something like that. And it makes sense to kind of wait right now. I mean, I don't know if tech is fully valued, but the point is one, you're taking chips off the table, you're letting the election play out, and two, generally October is a pretty slow month in advance of an election, because everyone's buying vol for the election month. So people are buying puts and calls to position and hedge the portfolio in anticipation of either Biden winning or Trump winning. No secret. We think that in the short term, the market does a lot better with Trump winning. The reason being just more stimulus, more business-friendly nature, low tax rates. 20% corporate tax rate, can't beat that, really, to be honest. It hasn't been that low historically. And with Biden, he's going to raise corporate taxes. That's going to reduce EPS, and that's going to hurt numbers and valuations. And most likely higher rates, like interest rates, will go up, and that's going to hurt valuations too. So, I mean, when money is costly, valuations come down. So we think we are positioning for both. Like we're long puts and long calls, but we're cautiously optimistic that we think Biden's going to win and the market will react favorably after an initial jump. Things will settle. We don't know how much regulatory unwinding Biden's going to do of Trump's regime. So is he going to raise rates this year or next year? We don't know. But we know he has a lot of access to grind. And if he does all the things he says he's going to do, that's probably going to lead to more volatility. Because like businesses don't like volatility. Businesses don't like change, right? If there's a lot of change, it's hard for businesses to position their divisions and think about where they're going to get their revenue from. And so, increasing the rates is not good for business. So they're going to have to do a lot of restructuring around that. So we'll see. But we're cautiously, we think that no matter who wins, the market goes up. And then as Biden starts to make his regulatory changes or try to pass what he wants to pass, there will be some volatility coming. And we could see the market selling off a little bit, and we'll see how Bitcoin does in that environment.
But you also said you don't have an edge trading these. You're just gonna ignore these and position for a slightly longer term. Is that right?
Yeah. So like right now, like we're long, November calls, and we have cash, and we're actually long puts out to December too, just in case anything happens. And the reason is the cash acts like a hedge to the book, right? If things fall like they have been for DeFi, for instance, we have cash to put to work. The calls act as a hedge to the cash in the sense that like if Bitcoin goes up and we're not fully invested, we'll keep pace on a delta adjusted basis with the calls. And it's always good to in terms of the puts that we have, it's always good to roll some profits either from calls or from trading into puts and just act like as a hedge, like a global shock hedge. Like if you saw what you had in March, if you had any puts around $6,000, which was like, I think the delta on those puts was like -10, you would have made 5, 6, 7x on your money in the crash that happened. So we use derivatives as like an overlay to the book and to hedge and express a view. Right now, we don't really have a view going into the election, which is why we have both cash and we have calls. So yeah, I mean, we're trying to just optimize based on our view. I mean, in the long run, like we're all here because we think Bitcoin's going up, but it's not going to go up in a straight line. So, that's the cash and the options are used to like express a view with a tilt. And our tilt is generally as a held deposit fund. It's going up. We don't know when, but we roll our options month to month. We typically buy 30, 40 strikes, 30, 40 delta strikes. And, because if you hit that and you get an IV spike, that's like a 3X right there. And, we typically roll these month to month. So we'll see.
Do you have any rule in terms of when not to buy options? For instance, if vol is too high, buy vol is too high.
Yeah, that's a great question. So historically, if you look back, like Bitcoin historical volatility is like mid 70 handle, right? So 75-ish%. But historical volatility is backwards looking, obviously, and implied volatility is the market's expectation of future moves. So it's very difficult to time this, but generally you don't want to be buying vol when it's over 100%. That doesn't mean you can't make money. That just means you're paying a lot of money to get that move in your direction. You've got to also be right. So we try not to buy vol when it's like over 80, 90%. One, because it's over the historical average, and two, because if the market's expecting that big of a move and you're just holding spot and you're long anyway, and the market's right, you're going to participate in that move. Maybe you're not going to make as much money as you were in an option, in a low delta option that you get right. But if the market's right and the move comes and you're long spot, you're going to participate in the upside. We always tell investors, we're not trying to give you 100% of Bitcoin's gains on the upside every day. We're trying to give you 80 to 90% of Bitcoin's upside and 40 to 50 on a bad day, 55% of Bitcoin's downside. And we're doing that, in a risk managed way. So that means we're not going to be fully invested all the time. And if we're not fully invested, we're going to play derivatives to try to keep pace on the upside and to hedge on the downside. So that's our strategy generally, is like, if it's too high, you shouldn't be buying. And
but you're happy to buy if the vol is like 60. still,
Yeah,
right?
yeah. I mean, if
but
fully invested, but yeah, yeah.
but
Also,
the vol has been trending downwards over the last few months, right? And there might be some underlying structural reasons for that.
absolutely.
So you can't really compare the current implied vol with the entire history, right? You have to compare with the recent history because of the underlying structural changes.
That's a great point.
So
there is
I don't know.
No, you're right. Go ahead.
I just feel like 60 might be too high, but it's just my personal opinion.
No, you're right. Like there's a very big, like that's an excellent point, dude. Like even though implied vol is low, you still may be overpaying for recent historical or for recent realized volatility. So like Bitcoin is realizing, I just had this up, I was looking at it. I think Bitcoin's realizing like 30% vol. And I'm paying right now 45%. So based on last month, I'm overpaying, and you overpay for a while. Like that's why it's a great point. Like I'm still theoretically overpaying for the recent history, but it's still a bet that first of all we're now risking a lot of our AUM on our derivatives positions. We try to keep it at 1 to 2% of our AUM. And, because those deltas roll off every month, if you're only buying 1 month options, those deltas roll off, you have to rebuy the premium. But the point is that I still could be overpaying, but because we're risking so little and we're trying to hit a 3 or 4x with these 30 to 40 delta calls, or even if we go up on the wings and buy a 10 or 20, the one time that you do hit it, it's going to make up for the 3 or 4 months that you've lost money. Especially if you have like systematic rules in place like we do regarding like when you take the profit, when you take some off. And we typically try to take it off, like if we're buying a 25 delta option and it moves to the money, it'll go to 50, the delta would go to 50. I'll take it off, I'll take a portion off then, and by then it'll probably be a 3x. I'll probably take a portion off then and let the rest run. So the point is I've more or less made 3 months back in 1 month, if I get it right. And if not, you're not risking a lot and you keep buying it over and over and over again until you do hit it. So like June was a good month. July was a good month. June was a pretty good month for this strategy. And obviously the last 2-3 months have not. August has been not that great. September has been not that great. And October is probably going to be a dud as well, just because everyone is waiting for the election. Like if you look at the skew, and you look at like on Deribit, October is pricing in, what is October? 50% IV on the wings, or 55% on the wings, and then November is 70%. So November is pretty expensive because everyone's pricing the election.
Yeah. So do you want to talk about some of the underlying market structural changes? Because I know you want to talk about maybe the leverage, the OI. As well as the implied vol stuff that changed over the last few months.
Yeah. So OI, interestingly, like one of the reasons most people when they woke up this morning and they saw that Square had bought $50 Bitcoin or $50 million worth of Bitcoin, and they were expecting a massive pump. And we've seen those massive pumps historically. But like right now, I don't think you're going to see this type of a massive pump, and you haven't today. I mean, it could happen tomorrow, it could happen the next day. But like if you look at aggregated open interest on skew, and if you look at it over the past month, open interest has stayed flat at roughly $4 billion, and this is across all the exchanges, and this includes the unwinding of BitMEX with people taking their positions off or their Bitcoin off the platform. OI has stayed at a little under 4 billion all month. And that implies, like if OI is a measure of leverage in the futures market, that implies that no one's really off sides. No one's getting bigger and no one's getting that much longer and no one's getting that much shorter. Mm-hmm. And this also makes sense if this is corroborated by the fact that like funding rates over this same time frame, over this 1 month time frame, has stayed relatively flat. Like it's not, no one's like, it's all 0.01% on Bybit, 0.0128% on FTX, and the averages have been over this time frame less than a point, less than 1%, like maybe 50 bips. So actually under 50 bips, which shows you that neither side is really offsides. And if neither side is really offsides, you're not going to see these massive exacerbated moves where shorts are getting licked and the price keeps going up, or longs are getting licked and the price keeps going down. And I think this actually dovetails back to what we were talking about earlier. Like these, like when Trump said he had COVID, and when BitMEX had like the regulators come down, there wasn't a massive move because no one's really offsides to exacerbate a move one way or another. Mm-hmm. And so that's one thing we think is interesting. Now, this doesn't mean that Bitcoin can't like peel off a $1,000 a day candle. It just means that market structurally right now, it's not positioned to really go to nuke or to scam up. It's not like, I mean, I wanted to, trust me, I wanted to. And you know, you may ask, okay, so if you don't think it's going to scam up, why are you long deltas in calls? And I would say, because I'm not that long in October, I'm much more long in November. And I'm paying for that. So that's my answer to that.
Got it. Do you think the, I mean, what do you think happened to, I mean, this is very related, right? Like the OI and the implied vol. What do you think happened to the implied vol market over the last few months? Like what caused the vol market to trend down? There are theories of you know, options sellers, right? Like vol sellers, right? And there's also theories of those people, I guess, suppressing the spot market. I mean, how do you think about these theories?
Yeah, I mean, I think it's right. I think, you know, you have big funds, like you have Renaissance and New York Dig, like Babel plays the curve. A lot of people are on the CME curve, and they just, you know, these are yield chasers, or they're yield generators. They don't care about the price of Bitcoin. They care about generating yield from selling volatility. And the market has not seen players of this size that can sell this amount of volatility. And when, you know, like IV is dictated by supply and demand. Like if more people are buying, if the bids are stronger, the price will move up and IV will jump. But in this case, it's not. Like you have these players selling the crap out of vol, and there's limitless supply, and that limitless supply makes it so that, you know, vol is suppressed. And if the underlying doesn't move up, that vol is not going to be realized. So these guys don't really care what's going on in the Bitcoin market. They just know that they're going to make 5, 6, 7, 8% a month selling volatility, and they may do it opportunistically. Like they may wait. Like in July, I was talking to a few of our OTC dealers, and they were saying they're waiting on Bitcoin to keep moving up, so that when they sell vol for the next month in August, they're going to get a higher yield, right? Because Bitcoin's moving up, it's reflexive. But yeah, I mean, that's definitely happening. That's definitely happening, is that, you know, and then the dealers have to delta hedge. They'll sell you volatility. And when they sell you volatility, they have to buy the underlying, and vice versa. When they buy volatility, they have to sell the underlying to stay delta hedged. And at the size of what some of these guys are doing it at, overpowers, or it's bigger than most of the market, most of the retail market for sure. And so you get Bitcoin in these tight ranges that it doesn't really move, and vol gets suppressed. And, you know, we think that that's going to work until it's not, until one day it's not going to work, and the underlying is going to move up.
Do you think the option seller, the vol sellers, they're also suppressing the spot market itself? Like, is there a direct causality there?
Yeah, I mean, I definitely think the vol sellers are, I mean, certainly the OTC desks are delta hedging, right? They don't take directional risk. Like they sell you vol, they buy spot. As spot moves up, and theoretically they get shorter, they buy more spot, right? Mm-hmm. And then as it moves down, and they get longer in the option, they sell the spot. Like they are always delta hedging, and they're always.
Yeah, but this actually increase. This dynamic, this gamma hedge, like delta hedging, this gamma actually should increase the volatility of the realized volatility, because as the spot goes up, they have to buy more spot, right? So this should, cause more of those scam wigs.
I mean, that's true. That's true. I mean, I have to look at, I have to dig deeper into like an understanding like the net gamma positioning of the dealers. But yeah, theoretically, but again, to your point, like Bitcoin hasn't really moved, right?
Yeah.
So they don't like, it's stayed in a tight range. So it moves up $100. Maybe they're not going to, maybe they have a higher risk tolerance. They don't want to hedge it there and it comes right back down. Or maybe it goes up and they sell it and it comes back down. Like it just depends on, like their risk parameters and what positions they want to take. But you're right. I mean, theoretically, it should be reflexive. Like as it goes up, they have to keep buying. But also they could be delta hedging by selling more calls higher. So you really don't know how they're doing it. And I'm not on a desk to know that, but like there's a lot of ways to hedge, and the size of these guys makes it tough to move Bitcoin without a huge influx of capital into the market. And, you know, we'll see what happens with that. Hopefully it happens soon for our options.
All right, let's talk about DeFi.
Okay, let's talk, bro.
What the hell is going on? Are we, is DeFi over?
Is DeFi dead?
Yeah.
No, man. No, like you look back at some of these, Lend was at 6 cents. Like I have to get the chart up, but Lend was at 6 cents maybe 4 or 5 months ago. You know what I mean? Lend is sitting here at 45 cents today. It's still 600%, 6x up from where it was. More than 6x up, sorry, 7x up from where it was.
Yeah, well, okay, so I mean, except other than the maxis, I think most people agree that DeFi is not dead, DeFi is real. But where are we in the cycle? In the hype cycle or bear cycle?
That's a great question. I think that we had the hype cycle where it just went berserk. We saw Wi-Fi at 45,000. Now we're at a place where you're probably going to see, you're going to need to see like infrastructure changes to a lot of the DeFi platforms and protocols. Like you're going to have to see like layer 2 scaling solutions and gas prices come down or gas move off chain and things like that for DeFi to take the next step and onboard the next group of users. And like where I want to go with this is as follows. Like a lot of Q4 narratives that we're interested in is composability. So things like Aave and Synthetics using a automated market maker to trade one-sided derivatives. And here's what I'm trying to go with that is to say, for DeFi to take the next step, the protocols are going to start working in an integrated fashion with each other, and they're going to start doing it on in a much more seamless way. You're not going to have to go back and forth between Lend and Aave and Synthetics. They're going to know where your collateral is on one side, so you can take an offsetting position on Synthetics. Like I'll have a long, I'll have like Wi-Fi deposited as collateral on Aave, and I'll be able to open up a Synthetic short on SNX, for example. And I think that's the next step for DeFi. Composability, ease of use. And once that comes, once we get that composability done and once L2 works, I think then what you'll start saying is you'll start seeing like something like a decentralized BitMEX or a decentralized options protocol, things like that. Right now, I think for decentralized options protocols, I've talked to a lot of market makers. They don't really like it because all of their positions have to be fully collateralized. Like if they sell an option, that short position has to be fully collateralized. And that's not a good use of their capital. So the point is we're not there yet, but we did go through the first hype cycle. People are seeing how amazing it is that I can deposit assets on one side, I can borrow against it, I can move it anywhere, I can farm. And TVLs are still high. Like if you look at DeFi Pulse, TVLs are extremely, like TVL may not be a great metric, but TVLs are still high in the sense that it's still well over $1 billion. And it's got a lot of room. It's just cooling off right now. DeFi's not dead. DeFi's not dead.
Yeah, I mean, I definitely agree DeFi is not dead. I guess the question is like, during this bear cycle, where are we currently? Are we near the bottom or do we have more downside to go? How do you feel? Or is it case depending on the asset itself? case by case?
They're super I mean, you know this. They're super correlated. I mean, you may get some outperformance based on like a catalyst event, but like they more or less, a lot of them trade together. I personally think that we are much closer to the bottom than others do. I think like, so just using my favorite one, like, I mean, Wi-Fi was at $13,000 yesterday. I mean, what's the bottom? I think 10K could be the floor for Wi-Fi. It bounced off 13.5 pretty hard. My personal opinion is that Lend, the lowest I'd see Lend going is 30 cents, 25 cents, which is still a 4x up from where it was. Another thing to realize is a lot of people that I was looking at, like Into the Block yesterday, a lot of people are still deep in the money on their positions on a lot of these DeFi tokens because they've gone up so much. So, that's a major reason that you saw like that no one was selling Wi-Fi. Like there was no panic selling in Wi-Fi until recently because a lot of these whales are so deep in the money. And I think that we're much closer to the bottom than others do. If we go further down, I would say maybe down another quarter to 30%. And we are buyers there. Like, we are very open and transparent with our book. Like we're buyers 25 to 30% down. We're nibbling now. We believe in DeFi. And we believe that like for the market to mature and for people to take digital assets seriously, there must be more in this market than Bitcoin. And we love Bitcoin, but there must be more. And we think DeFi is the first sector with any true, adoption and users and growth, even more so than gaming. So, yeah.
Which DeFi assets would you be a buyer of, assuming they drop further, I guess, 20, 30%?
I mean, I'd buy, I'm a Lend, I have like a soft spot. I'm a trader, but like I have a soft spot in my heart for Lend, and I'm supposed to be unbiased. So like Lend, I'm buying it all day. Obviously synthetics. I mean, Wi-Fi at 10K is a really good value on a price to earnings ratio, just based on forgetting all the curve stuff, just based on like the APY that you're getting from, the fees that you're getting from stablecoin pool, like the Y tokens. So I would like literally buy all of them. Nexum, we love Nexum. We really love Nexum. We have a big position in Nexum, but like Nexum is a little different because it's priced on a bonding curve. It's priced based on a formula, not a bonding curve. And Nexum gives you like ETH exposure based on the way the formula works. So, we'd probably buy Nexum 25, 30% down more as well. So like, all the big ones, Uni, Nexum, Wi-Fi, synthetics, these are the, like, in bear markets, in my opinion, in bear markets or like in downturns, you want to consolidate in the highest quality assets. And these are the highest quality assets for DeFi in our opinion.
Yeah, so the uneasy.
Yeah.
Uneasy without the E. Well, actually, Ethereum, Ether, I mean, there's a big narrative of, I guess, Bitcoin dominance going up. And I guess one of the main components of the Bitcoin dominance, obviously there's Bitcoin, but the other big component is Ether, right? So what's your view on that?
On Bitcoin dominance?
Yeah.
I mean, it's sitting, we historically think, we think 65 to 63% is like the sweet spot for alts. Like generally, like just looking back on the past, like if you're looking at the chart, 58 to 60% is where you generally want to be cycling out of alts and into Bitcoin, just because it's sitting on support there. And we think that 63, like low 60s to 65% is generally where you want to be, like looking for trade ideas, looking for ideas in alts and playing catalysts. And this is always in a bull market, right? In a bear market, like you kind of just cycle back into Bitcoin or buy puts or go to cash. But we feel like we're in a bull market, and so the way we're playing Bitcoin dominance right now is right now in our portfolio we have a lot more spot Bitcoin than we would otherwise hold, and we also have those calls that I said. And we try not to overtrade Bitcoin, but like we'll do more long short trades. So we'll look at things that have run really hard, and we'll do a paired trade with Bitcoin as the long. So like an idea is like a curve Bitcoin trade would be a nice trade. Curve short, Bitcoin long. Curve short from $5, you could just leave it. But and also like a curve short is just like an inflation play, right? There's 2 million coming a day. It's just way too much sell pressure, and like the founders are shorting curve as well to hedge their.
Are you shorting currently?
No. Yeah. But we look at things like that. Just the ways to kind of like just generate like hedge out the beta and get alpha by doing the pair. But we are not shorting currently.
The beta on these things is so hard to calibrate. I mean, if you're short curve and long Bitcoin, you're just short curve. Because the volatility of curve is so much higher than Bitcoin.
The downside volatility, man. The downside volatility. There's upside and downside volatility. Actually, curve may have put in a short-term bottom here at like, what did it hit, like 40 cents or something like that.
Yeah.
Yeah. Do you think curve, going back to Wi-Fi for a second, do you think that the correlation between the curve price and Wi-Fi going down recently is an accident, or do you think that's part of the reason that Wi-Fi has been sold off so hard, in addition to the APY compression, which results from the reduction in curve price? Like, what do you think there?
I think the market isn't smart enough to figure this out. Like, it's like this is totally an accident. I mean, in my opinion, right? I think this is an accident because I think the vast majority. I mean, the way Wi-Fi trades is just textbook stuff. I mean, I've just never seen a chart as perfect as Wi-Fi, which suggests that this market is full of sentiment-driven retail participants, and they're just not smart enough to figure out this correlation between curve price and Wi-Fi, the yield on Wi-Fi. So I definitely think this is an accident.
It's fair. It's totally fair. What do you think? Like, so like one thing we were talking about is like, let's say curve price never recovers. Like it never gets. I mean, obviously 5 when it came out is way too high, and let's just say that curve's long-term price is 10 to 15 cents, so that you're really never going to get those massive APYs that you had in the beginning on Wi-Fi. And generally, the return from Wi-Fi within the Y tokens is the lending rates from AV and plus like the trading fees. And in other words, like you're not getting any additional yield out of the curve token because it's just sold to the ground. Do you think Wi-Fi recovers in that situation?
I mean, there's a lot of all else equal in this question, right?
Yeah.
I mean, which is never the case. I mean, things gonna
all else equal. It's a theoretical question. Yeah.
Yeah. I can't answer this question because it's never going to happen. There's going to be new features, and Andre might just come back to Twitter tomorrow and launch Eminence, and I don't know, and then the sentiment changes, and then the way people value these DeFi tokens, they're going to come up with new metrics. I mean, the last cycle it was TVL, next cycle it might be PE, right? I mean, PE started kind of started during the last cycle towards the end, but price TVL was the dominant metric, which is really stupid. But the next one, people are going to get smarter, and people are going to use PE ratio, right? Or I guess PE sales or PE revenue. So I don't know. Yeah, sure, you could recover. I mean, 13K is a clear support here. Like if everyone who bought at 13K were currently in the money before this sell-off, and that's why we sold off around 13K last night. That was clear capitulation, right? So yeah, we can go a lot higher from here. Yeah. I personally expect a really a big bounce relief rally from here. That's going to hurt a lot of people. That's going to hurt all the bears and all the bulls. So we'll see. But I don't know if this is the bottom, but I think we're going to bounce really hard.
Yeah, no, I mean, I agree. Like, and people love the beta when it's going up, and they hate the beta when it's coming down. And it's like drilled into my head. It's like that's why you risk manage. And you don't try to sell the top and you don't try to buy the bottom, and you take it in blocks. And this is a good thing. I think this strategy, like, on crypto Twitter, you have a lot of the LARPs and the retail guys talking about, that they crushed every trade. And it's like, that's probably not true, one. And two, like, you at a fund, like, you have to manage risk, and you can't put like 35% of your book into Wi-Fi when it's so volatile. Like, it's hard to do it and justify that to your LPs. Like, and you would look like a genius if you sold Wi-Fi at the top, but like, you're probably not going to do that. So it's all about sizing and managing that risk and taking profits when you can, and just buying it and selling high. Yeah.
So on that note, what are some of the upcoming narratives, DeFi narratives not this year DeFi, I guess, in general, in Q4 that could move the market?
Yeah, that's a great question. So we think 2 or 3 things. We are still on the fence regarding NFTs. First of all, like, I mean, I know people are talking about it, and it's very much a thing on crypto Twitter, and a lot of like crypto influencers are talking about it. But like, we are still on the fence of how to play it, whether it's investable, whether there's like real value accretion beyond like, an Andre NFT with his face on it, or like a Blue Kirby NFT with their face on it. Like, we're still on the fence. Like, we're still trying to do our research there and get our hands around it. Like, do you buy the aggregator? Do you buy like the Rari token? If OpenSea comes out with a platform, do you buy that? Because that's where, like, theoretically all the transactions will occur at the marketplace. If you control the marketplace, you can kind of control the NFT narrative and dominate that. Like, we don't know yet. But I don't think it's in a lot of these meme coins. I don't. With that said, NFTs are definitely a theme for Q4. Layer 2 is a theme, just because, like, you have optimism coming. Like, there's a lot of value in XDAI. XDAI is like stake, except you don't need to own XDAI to have assets on that layer 2. So I don't know what the purpose of the token is. And then the other narrative that we think will become a little bit more interesting now, given what's happened to BitMEX, is privacy. And like, especially privacy within DeFi. Here's why. Like, I'm sure everyone saw today, like, FTT, Sam got a lot of flack for basically, posting FTT and Serum as collateral on Cream, borrowing Uni, selling the crap out of it, and then taking those profits, dumping it into Aave and borrowing wrapped Bitcoin. And the point is that, like, Sam can post FTT as collateral, that much FTT as collateral, because even if it's liquidated, no one can sell that much. So it's kind of like liquidation-free leverage, right? Risk-free leverage for Sam. And the reason I'm telling you all this is to say, we think in the future, privacy and like protecting your positions and protecting how you're trading and what you're trading and where you're trading is going to be a theme. And this applies not only to traders, but to like node operators as well, with the risk of like regulatory oversight. So we think privacy is going to be a theme, and we're not really sure how to play that one either yet. To be honest, we're still thinking about it.
Yeah.
What do you think?
The privacy is the hard one, especially in DeFi, because there's no project that's currently live with a privacy first feature, or there's no like a super well-known product privacy feature right now. So it's hard to play it. But I mean, I don't know, like Zcash is the first halving is gonna be in October, and Monero looks extremely strong right now. It's just, I don't know how these things are related. Like Monero, Zcash are probably not related to the DeFi narrative, but there is this privacy narrative. So I mean, Monero is just extremely strong. Like I'm really genuinely surprised. And I think the Zcash first halving is going to be a legit halving, unlike the third Bitcoin halving, which is totally ridiculous. I mean, it just doesn't do anything. I mean, I don't know why people think the third halving will cause Bitcoin to double from here. It's just ridiculous. But Zcash first halving is actually legit because the inflation is extremely high right now. So that's actually gonna reduce a lot of supply in relation to the trading volume. So I think that's gonna be important. I am curious though about L2 narrative because there are some, there are some tradable assets, right? Like XDAI and Matic. But do you think, would you trade these assets, or do you think the L2 narrative will impact other assets, like the product assets?
I think L2, like I'm more bullish. I'm the other way. Like I agree. I think that like I agree with what you're implying. I think is that I'm more bullish on the DeFi tokens that will benefit from L2 much more than the L2 token itself.
Yeah.
And like I'm not an expert on L2. Like I have to spend some more time with it. But like I want to have these L2s work so that I don't have to spend, so that first of all, the average retail spender doesn't have to spend $100 to stake Curve and get Y Curve. You know what I mean? Like I want like lower gas fees. I want the transactions to be smoother. I want to be able to move size in and out without having to worry about 15-second delays between blocks. And I'm much more bullish on DeFi working together with a solution that makes it faster. But that remains to be seen. And like, I'm not an engineer and I don't know how this stuff works, to be honest. So my inability to like be bullish on the L2 tokens themselves just comes down to the fact that like, I don't really know how L2 works under the hood. I just know what it's supposed to do with my DeFi tokens.
Yeah.
So that's how I'm thinking about it.
Yeah, got it. All right, maybe one or two last questions. Any prediction that you have on anything that would outrage a ton of people?
Outrage a ton of, that's a great question.
Basically something contrarian. Something so contrarian that people would be angry about it.
I don't know. I don't think I personally don't think that we will see a $40,000 Bitcoin by the end of next year. I don't think we're gonna, like people think, like in my opinion, like it's gonna take a massive structural shift in like the minds of people.
Yeah.
For the amount of capital to flow into Bitcoin.
Yeah, okay, but this is not contrarian. Like this doesn't count.
All right, so let me think of a contrarian thing. You go first, and then I'll think of something.
I think Ether is not going to break all-time high for a decade. I think people are going to be really angry about it.
It's not contrarian.
Well, you said 2021. I said an entire decade. 2030.
I think. Let me think about things I like.
By the way, I love Ethereum. I just don't think Ether is gonna. I mean, Ether is gonna do well from here, but it's gonna be very hard to break all-time high, which is at 1400.
Yeah. But like that makes sense because like you just went through a month where the miners earned more in fees than they did from the block reward for the first time, right?
Yep.
ETH didn't move. ETH didn't really move. And like, and obviously it's not baked in to price, but like the point is like theoretically, like if you think about the gas as like the higher gas fees as meaning like ETH has value because people are willing to pay to transact.
Yeah.
If it's not going up when the fees are actually exceeding the block reward,
yeah.
What's going to happen, you know, when you're just getting a bunch of yield from staking it?
Well, I mean? Yeah, you know, on that note, I should take my prediction back because if they implement that EIP 15, whatever, 1500 or something like that, then yeah, we might see all-time high pretty soon. But I guess we're not going to see all-time high market cap.
Okay.
Yeah.
Here's a contrarian view.
Yeah.
I think that the only, like eventually these IBC tokens, so things like Cosmos, Kava, Rune, secret. One of them is going to figure out how to do cross-chain swaps with Bitcoin, like underlying Bitcoin, not wrapped Bitcoin where it's like over collateralized with 700% with their shitcoin, but like one of them is going to figure out how to do actual Bitcoin swaps, and then layer 2 is going to make that swap that much faster. And I predict that you're going to see a lot of these other like Ren and Keep and like a lot of the synthetic Bitcoins go away because there's not going to be a need to do it. And if those go away, the tokens go away too. And yes, there will be arbs between swapping between the actual spot Bitcoin and like TBTC or Ren BTC. But like I think that once they figure out how to do actual Bitcoin swaps cross-chain, a lot of these over-collateralized tokens will go away. Over-collateralized Bitcoin tokens will go away. And I don't have anything against these protocols. I think it's really awesome. I'm just saying the reason I think this is because it's really not an efficient use of capital to have, to over-collateralize one Bitcoin, which is like the most theoretically safest crypto asset. You can't over-collateralize that with a highly volatile alt, you know what I mean, to create this Bitcoin. So that's my contrarian view. I know a lot of people like Ren. I hope I didn't offend anybody there, but I just think they're going to figure this out and it's going to work really well.
But WBTC, like if your thing plays out, but then WBTC will still be here, right? It's not over-collateralized.
It's a little bit different because WBTC is completely centralized, right? And I think actually people will tell you what they want, whether they like or they don't like centralization, but like centralization for certain people is good because it gives a sense of security, and sometimes you want a counterparty to yell at. And you know, BitGo has insurance on the Bitcoin custody, so it's not necessarily a bad thing there. That if that's what you want, I understand why you would use wrapped Bitcoin. I get it. But I truly don't understand over-collateralized synthetic Bitcoin, which is backed by a highly volatile alt. I really don't get that. Yeah. That's where my disconnect is. But I understand WBTC, and I think it's great for DeFi, and I think it's great for the ecosystem. And you know, that's never going to really scale because they're going to have insurance limits on what an insurer will sell cover on. For like, they're not going to sell cover on like, you know, $2, $3 or $4 billion of Bitcoin, or maybe they are, but there's a limit on what they will sell insurance for. So that's always going to have a scaling problem.
Cool.
Yeah.
All right. We hit the 1 hour mark, and really appreciate you coming over and talk about your insights. We'll post this in a couple of days, and thanks again. Thanks everybody.
No problem. Thank you. Appreciate it. I'll see you on Telegram.
Yeah, take care.